Hello everyone, welcome back to the channel, welcome to the Daily Pips Trading. I want to talk backtesting and once again backtesting today. I've been backtesting the markets for the last 5 years and I have data running since 2009, which gives me a possibility to entering and trade and knowing what the market is going to do next. I did a little bit of backtesting during the live stream that I would like to show you around, because me right now running over $4 million in assets under management requires precision and requires entries where I know what the market is going to do actually. I know that because I've backtested for ages. I know that because my data tells me my win ratio. My data tells me whether I'm going to be successful or not. My data allows me to trust whether the next trade that I'm taking is going to pan out or not. Knowing that, I'm able to trade successfully and I'm able to trade stress-free. Let me show you how to trade stress-free while it's doing a lot of backtesting itself. So if you don't mind, before we dive into the backtesting session with me, leave a like, subscribe to the channel itself. We do this day in, day out, and I very much hope you're going to enjoy this. Let's dive in.
Looking at the week itself, what kind of expectations we have? We never look for a top. Never ever look for a top when we're trading at all-time highs. Thus, expectation out here is what? Is bullish. We're looking at Monday trading and we're expecting the market either to consolidate like we actually did, or to go lower, which would be called a manipulation phase for us because we're not trusting in that move, or we're expecting the market to shoot up higher because that's where the drawn liquidity resides. Not drawn liquidity directly, but the expectation itself is for the market to go higher. Let's take a look what we get. What are we looking at? We're looking at a very nice liquidity pool on ES here. I like that. I'm gonna minimize this a little bit. We're looking at a very nice liquidity pool here on ES. I love that. We're looking at this structure right before the macro kicks in here at 10 minutes to 10. We're looking for the price to deliver higher, but we're afraid of this breaker block. What do I mean? We have a high, low, higher high, lower low. On paper, everything below this is bearish, so we're a little bit scared. What are we scared of? We're scared to take this long. We are scared of taking it because we have to consider the fact that the breaker block is bearish, that the breaker block might allow the market to go lower from where it's trading at right now. Order block itself, that's cool. See the possibility of working it higher. We're not taking it. Why? Because we're waiting for a higher time frame inversion. I think this is coming from 4 or 5 minutes. You can check yourself on Monday. We're still not taking it. Why? Because we're looking for perfection. We're looking for a setup that we know is actually going to pan out. What happens? Breaker block broken. We get rid of that. Drawn liquidity up here. Is that delivered? Nope. We're what? Quarter of a point away from this. Not delivered though. Not at all. Continue pushing lower. What happens then? What happens then? Come back into an inversion. Offers us a possible trade that we literally have to take because we know that the risk reward is good enough. 1 to 3, 2.225 risk is brilliant. Why? Because we don't want the market retracing into this. And not only that, order block precision. Take all this clutter away. Take this all away. This is beautiful. This is certain. This is precision right here. And we enter and we take that double top here and we profit. Trade of the day for Monday this week. Okay? Because make a guess why? Because we booked the trade. Do you think I took that screenshot just for no reason? No, I didn't. I took that screenshot because I logged the trade. I have it in my notes, so I go to next day. Tuesday trading. Hard day. Incredibly hard day to work with. Incredibly hard to execute. Yet trades were offered. What do we have? we have a double top here on NQ. Monday and Tuesday high are almost the same. We have liquidity resting above here. So we know that. We know that we're gonna deliver there at some point. We do. We're not interested. We're looking for a high probability setup. So let's watch. Let's see what we do on Tuesday. That's a trade. Is this high probability? I'm making a pause on purpose. Is this high probability? No, it's not. Why? Not enough. Get rid of that. It's a good short though, man. It's an incredibly good short. Not in call zone. Not taking it. In Q? Does it offer anything good for us? Precision is there though. So yes, I'm getting rid of these bad boys on yes. Because we're not using them. Structure is getting broken, not using that. Love what is happening here with NQ. First, bearish order block. Last up close candle. Holds in the price. 1 minute. Short. Why not? Break of structure. Yes, please. With the fair value gap. That's a very good short. I'm not taking it though. What did I say about Tuesday? I want to see higher prices. I'm not... On paper, I'm not touching this. We're not interested. We're getting rid of these bad. This was something that I took. Yes, I took this trade. I was incredibly, massively, oh my god, how badly frustrated. My nose is running, sorry about that. Sorry. But I took this. Half a point too tight of a stop loss. Previous day highs, that's the drawn liquidity. We know that for a fact. We're gonna deliver that. We're looking for higher prices. We're not getting that. Broke that, but we're not getting that yet. Make a guess what happens. High probability setup pans out on NQ. Why? Kill zone. That starts at 2 o'clock. Buy side taken. NQ fails to do that. MT. Present. Is this a liquidity pool? Do we have 1, 2, 3, 4, 5, 6 relatively cool lows? We do. We're looking for the market to attack it. SMT into what? Inversion. 1 to 4 risk reward. This is insane. This is what we strive for. Not only 15 minutes for value gap holds in the price. Not only we have an SMT with ES higher than inversion bomb enter liquidity pool. So that's Tuesday trade. I'm getting rid. No, I'm not gonna get rid of this because I want to put it in screenshot. I have to save it so I can review it afterwards. That's how we learn. Yeah. Now we can get. Where do we go next? Wednesday, yesterday. Guess what about Wednesday? We're not even looking at it because there was no trading Wednesday. Funny, right? But let's take a look at what we're getting right now. I'm not gonna touch it. So, let's play around with what we have right now. I'm gonna do something funny here. Not like bad word. Not funny. Getting rid of a lot of stuff here. Previous day's lows, let's keep that. Let's keep that 15 minutes for value gap as well. We're gonna do some proper backtesting now. Let me prep my chart and then we do some digging into this, okay? We're gonna abuse NQ for this because I already know where I'm gonna draw my eyesight towards to because I remember where was the actual trade of the day. ES goes to the corner because we're only gonna need it for SMT purposes. Yeah. What we're gonna do with NQ, we're gonna do some backtesting, which should be fun. I do this a lot, but I never do it in front of you guys. So it should be fun. Go into the session. It's gonna show you where I went long. This will be fun. Yes, I only have it on the left hand side just for just for SMT purposes. We're coming into the market knowing the fact that price is bullish. So replay mode again, cut it off. The price is bullish. Price accumulated down there and we're looking for higher prices now. Accumulation, manipulation, push to the upside, double top liquidity taken. We're looking kind of for higher prices because we're not trusting the fact when the session starts, not throughout the day. When the session starts, we're not trusting in the fact that this is the top. We never look for the top, never ever, unless the structure gets broken. Right below, where the fun begins. Going into lower time frames. There was a trade that I took once that structure was broken. Let's allow the market to print alone. The news comes through, which is cool, which is fine. And what I see right away, lower prices because of that 1 hour for fair value gap being broken to the downside. It's cool. I see this 5 minutes opening here that I know immediately. And I'm watching for a possible draw on liquidity here because I'm literally interested in higher prices. Why? Because I see this being run through and no liquidity is being taken in a way, you know? So I'm considering this. I'm allowing the market to print. Obviously, yeah? Pushing lower, pushing. Nothing too shabby. Nothing too interesting. Previous day low is right there, new week opening gaps are right there. Market is looking to up quite soon as well. Still waiting. Oh. Market open. Can we work with this? We never do because market open. Stage of manipulation. Where there's no predictability in terms of actual market. Market continues printing. I stop it because with the next there should be an opening. Cool. Not only that, you take previous day. What does it mean? Compared to ES, which is a little bit higher, we have an S. NQ is a lot weaker. Thus, note this. Further. Few more. Candles book the price. Watch ES. Where is ES at 9:30? 9:30. What does it mean? Not only we have a higher time frame SMT, we have an SMT. I like this as a possible entry now. Any openings? Any possible trades? If you're trading order blocks, this is your entry. I'm not touching that though. What has just happened? An inversion? That's a partial. That's my interest. That 5 minute fair value gap is still my interest. Because I'm kind of trusting there's not going to be any tops yet. What we're gonna do with the next candle. When it opens, fine. When it opens, we're gonna enter because this is literal. This is not a fair value gap anymore. Version. We enter. Stop loss. Do we need to go below this? Not really, but we have to be careful. Risk to reward 1 to 2 is fine as well. Entry. Bam, we're in. Partial. Partial goes off. What do I do with this partial? Do I move stop loss to break even? Possibly I don't. I would say I don't. So we continue watching. We see a fair value gap here. Because now liquidity was taken here. I don't want to go. So I'm moving my eyesight towards my sell stop. Towards my stop loss. Because I don't want to be hurt anymore. Still good. And now that's where the issue comes in. Just close below it. So you're not allowing yourself to be dealt in. Closing the trade. First trade of the day. Previous day low taken, inversion. We like that. Let's go. On 10 to 10 macro is starting here. Anything we can work with? Not really. Fair value gap here. Pushing the price lower. Totally reasonable. We're good with that. No entry though. 10 o'clock comes. What do we have? We have an opening by being trading in the middle of it. 50% level is up somewhere around here. What do we do? Continuously wait. Everything below this is bearish though. We're good with that. New day opening gap. Supporting the price. I'm opening. We take a look at what? 15 minutes? Nothing too interesting. 5 minutes. Nothing really interesting. Printing more. Sell side taken. What do we have? Did we take sell side on ES at 10:08? No, we did not. As present. The lower low compared. Another opening. Market really printing lower now. Anything we can work with? Up until the point that we gone so low. Not really. But what we have to realize is that this is an important fair value gap because it allowed the market to run lower. And what is important is that there's an SMT again. What do we do with that? We look for a possible long entry. If we go above, why? This is my interest still at 5 minute fair value gap, very far away from us. Who's gonna be taken there? Let's go. We're in trade. Partial take. Do I move my stop loss to break even here? Risk free. No more. Now the fun part begins, where you kind of just wait. See the order block price? Or is it happy with that? See this being inverted. You're even happier now. You want this to hold in the price. Does it? It does. So when you enter here, why not? This is a perfect. Add to this? No. Why? Because we're going against bias. I'm not in. Are we scared that the price is retracing into this? No, everything above this and this order block is bullish still. Not scared. Do we have? Do we enter here? No. Why? Because it's against bias. We're holding on to this. Another partial goes off here. Certainly. Where did we stop? Not noting random fair value gaps, I'm noting important fair value gaps. Why? They happen through the macros. What I do here, I took a few partials in a perfect. Everything above this is bullish. Still in this. And now I'm scared. This was supposed to hold in the price. I'm scared. I actually moved my stop loss here. Here at least, maybe even here. New day opening gap, not holding the price. Stop loss is here, not in. I'm done. This is like this. Put it in my notes. I'm not gonna need this ever again because I just heard this screenshot. Continue watching. Yeah. Have this 5 minute fair value gap. I wanna see it invert now. 4 minutes. Not only this 4 minutes in structure plus balance. Like this. See if we invert that 5 minutes. Yo. That we note on Tuesday even. We had it for 2 trading days. When we watch this again, this is incredible. Get killed here. Do that. Start going. And go. How good is this? How good is this, man? That's the trade. 4 minutes chart. Put it to your notes.
I know you watched it, so tell me what is the next market you're going to backtest in the comments below. I would be more than happy to help you out or to hear your story. So let me know in the comments, and without any further ado guys, very much hope you enjoyed watching this video. I very much hope you find it insightful. If you did, please leave a like, subscribe to the channel itself. I very much hope that I'm gonna be able to provide you value with the next video. So stay tuned for that, and I'm gonna see you next time. Bye.